Hey there, econ warriors and finance fiends. Welcome back to Boss Economics World, where we slice through the government's economic nonsense like a hot knife through butter. I'm your host, the guy who's always got a bone to pick with the clowns running the show, and today, oh boy, do we have a doozy of a mess to unpack. So, grab your coffee, mute your boss's Zoom call, and let's dive headfirst into the latest government-induced economic dumpster fire. Last week, the economic world got a front-row seat to President Donald Trump's latest brainchild, a tariff rollout so catastrophic it's practically a masterclass in how to tank an economy. Trillions, yes, trillions, of dollars vaporized from stock markets faster than you can say, trade war. Wall Street deal-making. Frozen solid. Hedge funds. Liquidating their riskiest trades like rats fleeing a sinking ship. Corporate lending. Grinding to a screeching halt. And, get this, even the almighty US Treasuries, the so-called safest asset in the world, are now being questioned. I mean, when you've got investors side-eyeing treasuries, you know the government has royally screwed the pooch. But hey, why stop there? The turmoil is so bad it's got the financial system trembling, exposing all sorts of nasty cracks in the foundation. And now, the million-dollar question on everyone's lips, when will the Federal Reserve ride in on its white horse to clean up the government's mess, again? Spoiler alert, folks, the Fed's hands are tied tighter than a straitjacket, thanks to, you guessed it, the government's own mismanagement. Let's break this down, layer by layer, from the surface-level chaos to the deep, dark economic rot underneath, all while pointing the finger squarely where it belongs, at the policymakers who keep driving this economy into the ditch. First, let's talk about the obvious, Trump's tariffs. For those who've been living under a rock, last week, March 31st to April 6, 2025, the president slapped a fresh round of tariffs on imports, targeting everything from Chinese tech to European luxury goods. The stated goal? Protect American jobs, and bring manufacturing back home. The actual result? A full-blown market meltdown. According to Bloomberg, global stock markets shed a staggering $4.2 trillion in value in just 5 trading days, making the 2018 trade war look like a warm-up act. The S&P 500 plummeted 12%, the Nasdaq tanked 15%, and even the safe haven bond market got hit, with 10-year US Treasury yield spiking to 4.8%, the highest since the 2008 financial crisis. Wall Street deal-making? Forget about it. Mergers and acquisitions activity, already shaky, dropped to its lowest level since the COVID-19 pandemic, with deal volume down 68% year-over-year, per Dealogic data. Hedge funds, meanwhile, are unwinding their riskiest bets faster than you can say, margin call. And corporate lending? Practically DOA. High-yield bond issuance, a key source of funding for businesses, fell to near zero, with spreads on junk bonds blowing out to 800 basis points over treasuries, per ICB data. Translation, businesses can't borrow, investors are panicking, and the economy is choking. But here's the kicker, even US Treasuries, the bedrock of global finance, are under scrutiny. Investors are starting to ask, are these things really safe? When you've got people questioning treasuries, you know the government's policies have pushed us to the brink. And who do we have to thank for this chaos? That's right, our fearless leaders in Washington, who seem to think economic policy is just a fancy term for playing Russian roulette with the global financial system. Now, let's peel back the layers and get to the juicy stuff. Why isn't the Federal Reserve jumping in to save the day? After all, the Fed's got a long history of bailing out the economy when the government screws up, more on that later. But this time, the Fed's stuck between a rock and a hard place, and, surprise, surprise, it's all thanks to the government's own mismanagement. Here's the deal, the Fed only steps in when markets are truly broken, when there's no meaningful price at which things can clear, as David Wilcox, former Fed official and current Bloomberg economics guru, puts it. And boy, are we getting close. Financial conditions in the US are already the tightest since May 2020, according to Bloomberg's Financial Conditions Index. The Treasury market is showing signs of serious stress, with bid-ask spreads on 10-year Treasuries widening to levels not seen since the COVID-19 panic. Deutsche Bank's George Cerevelos even warned that if this continues, the Fed might have no choice but to start emergency purchases of Treasuries to stabilize the bond market. Sound familiar? It should, because the Fed's been forced to clean up the government's messes time and time again. But here's the problem, the Fed's got 2 massive roadblocks, both courtesy of, you guessed it, the government. First, inflation is sticky as heck, and these tariffs are only going to make it worse. The latest Consumer Price Index, CPI, data shows inflation running at 4.1% year-over-year as of March 2025, well above the Fed's 2% target. And with tariffs jacking up the cost of imported goods, Deutsche Bank estimates inflation could hit 5.5% by year-end. That means the Fed can't just cut interest rates or pump cash into the system without risking a full-blown inflationary spiral. Thanks, government, for painting the Fed into a corner. Second, the labor market is still too strong for the Fed to justify aggressive action. Unemployment is sitting at a tidy 3.7%, per the latest Bureau of Labor Statistics data, and wage growth is chugging along at 4.3% year over year. Normally, that'd be great news, but in this context, it's a handcuff on the federal. If they cut rates or flood the system with cash, they risk overheating the economy even more, especially with the White House breathing down their neck. Remember, Trump's already criticized the Fed for past interventions, calling them weak and too dovish. So, the Fed's stuck, do nothing and watch the markets burn, or act and get slammed by the administration. Gee, thanks, government, for making the Fed's job impossible. Now, let's zoom out and look at the bigger picture. This tariff tantrum isn't just a one-off blunder, it's a symptom of a much deeper disease, chronic government mismanagement of the economy. For years, policymakers have treated the economy like their personal playground, rolling out half-baked policies without a shred of economic rigor, then leaving the Fed to clean up the mess. And every time, the fallout gets worse. Take the tariffs themselves. The idea of protecting American jobs sounds nice on paper, but in practice, it's a disaster. The Peterson Institute for International Economics estimates that Trump's latest tariffs will cost the average American household $2,600 per year in higher prices. And don't forget the retaliation. China's already slapped counter tariffs on $50 billion of U.S. exports, hammering American farmers and manufacturers. Soybean exports, for example, are down 40% year over year, per USDA data, costing farmers billions. Meanwhile, the European Union is gearing up to hit U.S. tech and auto exports, threatening tens of thousands of jobs. So much for bringing manufacturing back. All the government's done is kneecap American businesses while jacking up costs for consumers. But the real kicker is how this exposes the government's utter failure to address the root causes of economic fragility. For years, they've ignored the structural issues, like skyrocketing inequality, underinvestment in infrastructure, and a tax code that's a giveaway to the ultra-rich, while papering over the cracks with debt and deficits. The U.S. national debt is now a jaw-dropping $35 trillion, or 130% of GDP, per the Congressional Budget Office, leaving the government with zero fiscal room to maneuver in a crisis like this. And instead of tackling these problems, what do? Roll out tariffs that blow up the markets and leave the Fed to pick up the pieces. Classic government move, break it, then blame someone else. To really hammer this home, let's take a stroll down memory lane and look at all the times the Feds had to step in because the government dropped the ball. Spoiler alert, it's a long list. 1998, Long-Term Capital Management, remember LTCM, the hedge fund that nearly took down the financial system? That mess was fueled by lax government oversight of Wall Street, letting funds like LTCM leverage up to insane levels. When Russia defaulted and markets tanked, the Fed had to orchestrate a bailout and slash rates to keep the system from collapsing. 2000, dot-com bust. After the government cheered on the tech bubble, the inevitable crash left the economy reeling. The Fed had to step in with emergency rate cuts to stop the bleeding, all while the government sat on its hands. 2001, 9/11 attacks. The terrorist attacks exposed how unprepared the government was to protect critical financial infrastructure. The Fed had to flood the system with cash, with discount window lending spiking to $46 billion in a single day, just to keep markets functioning. 2007-2008, global financial crisis. Oh, this one's a classic. Years of government deregulation let Wall Street run wild, creating a subprime mortgage monster that nearly sank the global economy. The Fed had to slash rates to zero, open emergency lending facilities, and backstop the entire system, while the government scrambled to pass TARP and bail out the banks. 2020, COVID-19 pandemic. When the pandemic hit, the government's botched response, delayed stimulus, mixed messaging, and supply chain chaos, left the economy in freefall. The Fed had to cut rates to zero, buy up $1.6 trillion in treasuries, and balloon its balance sheet to $9 trillion, all to keep the system from imploding. 2023, Silicon Valley Bank collapse. And let's not forget the regional banking crisis, where the government's failure to oversee rapid rate hikes and bank risk management led to SVB's collapse. The Fed had to launch the Bank Term Funding Program to stop a full-blown banking panic. Notice a pattern? Every time the government screws up, whether through deregulation, bad policy, or sheer incompetence, the Fed has to swoop in and save the day. And now, with Trump's tariffs throwing the markets into chaos, we're on the verge of yet another Fed rescue. But this time, the Fed's hands are tied, thanks to, yep, you guessed it, the government's own mismanagement. It's like watching a bad sitcom rerun, except the stakes are the global economy. So, where does this leave us? With an economy on the brink, markets in chaos, and a Fed that's stuck playing cleanup crew for a government that can't stop breaking things. The tariff rollout is just the latest in a long line of policy blunders that expose the government's utter incompetence in managing the economy. Instead of addressing real issues, like inequality, infrastructure, or fiscal sustainability, they roll out gimmicks like tariffs that do nothing but hurt consumers, businesses, and markets. And when it all blows up, they point fingers at the Fed, Wall Street, or globalists, instead of looking in the mirror. Here's the hard truth, folks, this isn't just a market correction or a trade war hiccup. This is a full-blown economic crisis in the making, and it's 100% government-made. The data backs it up: $4.2 trillion in lost market value, 68% drop in M&A activity, 40% plunge in soybean exports, 800 basis point blowout in junk bond spreads, and inflation heading toward 5.5%. And the human cost? Millions of Americans facing higher prices, job losses, and economic uncertainty, all because the government can't get its act together. So, what's the fix? Well, don't hold your breath waiting for the government to figure it out. If history's any guide, the Fed will be forced to step in, again, despite the risks of inflation and political blowback. But the real solution starts with holding our leaders accountable. Stop letting them play economic roulette with our livelihoods. Demand policies based on data, not dogma. And for the love of all things rational, stop treating tariffs like some magic bullet when all they do is shoot us in the foot. Alright, Econ Warriors, that's all for today's episode of Boss Economics World. If you're as fed up as I am with the government's economic clown show, smash that like button, subscribe, and share this video with everyone you know. And hey, if you're a finance pro watching this, drop a comment with your take on how bad this mess is gonna get, I wanna hear it. Until next time, keep fighting the good fight, and remember, the government might be clueless, but we're not. Catch you on the flip side.